Okay, good afternoon, everyone. Thank you so much for taking the time, especially on a busy Thursday afternoon. I know I say this every single week on every webinar, every podcast episode, but I really mean it, and I really feel that every single agent that's sitting here right now with us, right here we are, early September. It's Life Insurance Awareness Month, and you're taking an hour out of your busy day, out of your busy schedule. And it's so important to me, and I know it is to you, that you walk away with nuggets. In fact, my team has to walk away with nuggets. I always make sure most of our marketers are on these calls as well, because we're here to learn. We're here to listen, learn, and take notes, literally take some of these new product ideas, sales strategies, and share with our agents that maybe couldn't make today's call live. So for you all, right, that are sitting there in your third bedroom or your 12th floor in the high-rise office building, wherever you are, okay, I want to make sure you're using the Q&A pane. Jot down anything that you feel is interesting, right, that you can use in your toolbox to make more sales and to open more doors, to share your story. Okay, so important. So jump in anytime. We're going to answer every question in real-time fashion. Okay, we have a moderator that's on with us. And if you want to speak to any one of our 11 marketers, and in fact, we're in 4 different states now, let us know. And after the call, we'll set something up. Any day and time that works for you, we will make happen on our end. So just kind of keep that in the back of your mind as we go throughout this presentation. What you're going to notice is a name that you have not seen in a while, okay, especially with Levinson. Yes, Prudential has been one of our top 15 carriers out of the 90 that we represent. We have a direct IMO contract, so they're very important to us. And yes, our marketers have been speaking about Prudential for over 20 years now. But you haven't seen any webinars, podcast episodes. And just so everyone is in the loop here, Prudential, number one, bigger and better than ever, A-plus rated, as you know. And when I think about Life Insurance Awareness Month, and I have my agent hat on, right, I think about branding, okay? I think about marketing campaigns. I think about a carrier name that everyone knows, okay? As soon as when you're talking to a consumer, and for us, it's an agent, but when you bring up Prudential, everybody stops. They're like, oh, really? Tell me more. Because everyone knows the name. They have an excellent reputation, excellent financials, and that household brand is priceless, okay? Especially because why? You're calling on consumers, prospects, okay? Maybe an existing book of business. So the way I look at it, you're halfway through the door just by saying that word, okay? Prudential, okay, literally. And then it's a matter of showing the value add. And when I think of Pru versus our other 90 products, actually 90 carriers and thousands of products. But when I think of Prudential, I say, okay, I'm an agent out there in Cedar Rapids, Iowa. When and where am I going to use Prudential in their products? Okay, and I think about it like this. I say, okay, number one, underwriting-wise, there is no one. As we know, there's no U.S. financials of the world any longer. There's no impaired risk companies. But Prudential has the most liberal underwriting guide and underwriting niches that I've seen in my 25 years in the business, period. Okay, and so here's what's so interesting. You have this great A-plus rated company, household name, everyone knows and recognizes, okay, and then you say, well, where's the gray area? And there's none. So they have competitive products and these great underwriting highlights that you need to know about. Why? Because you're going to come across that consumer, okay, and I'm going to share a case study that actually came in yesterday, but you're going to come across the prospect, the consumer, the client that maybe is a 15, 20 pounds overweight, okay, maybe it's an actual age versus nearest situation. Okay, maybe it's a cigar smoker. Maybe they have their prescription card for marijuana. Okay, and you need a competitive carrier. So when you look at the traditional companies of the world, I'm not going to get into all the various names, but we know who they are, and you run a quote, let's say on the right side, and then you run a quote with Prudential, okay, let's say for a tobacco user, okay, or maybe, like I said, height and weight issues, whatever, even diabetics, what you're going to find is you're not saving a few pennies of premium for the client. You're saving 5%, 10%. In my case yesterday, 50% of premium. Okay, do you think you're going to win over the case? Absolutely you are. And then when they look under the covers and they say, oh, it's Prudential. Oh my gosh, of course, I'm going to the left side, not the right side. You're going to get the sale every single time. So again, make sure your own toolbox has the right tools and you know enough to be dangerous. And that's what today's presentation is all about. It's like a relaunch of Prudential. Okay, you need to know what the latest and greatest is at Pru. And then they have this new IUL product that we're talking about today that was just literally launched. And again, you're saying to yourself, oh, they were always known as a conservative company. I know they were more of a career shop company years and years ago. Well, they just came out with an IUL that crushes it. And the proof is in the pudding because I ran an illustration yesterday for an agent, and it was unbelievable. Okay, I'm going to tell you real fast what happened. And I don't want to steal any of Brett's thunder. In fact, we have our VP on with us. He's going to jump on in about 10 minutes. John is also on with us, both from Prudential, our internal, and then our VP as well. So let me tell you about what happened yesterday. And this is real life stuff. This isn't, a salesperson pitching you on why you need to sell Pru. No, this is a real life situation. Okay, one of our agents, in fact, he's on here right now because I saw his name pop up on the attendee list, okay, had a 28-year-old client that had, let's just say, I don't want to say any carrier names, but it's the number one selling IUL carrier. We all know who that is, okay? So there was an existing IUL in force, okay, for this specific client, and what happened is the client was rated standard tobacco with this company, okay, a younger guy, and the client quit smoking just over a year ago, okay? Quit smoking just over a year ago. So the agent says, Bill, what can we do? And I went back to the existing company, and there's not much more we can do as far as a health class improvement. So we went right to Prudential. We ran the new Momentum IUL, okay, showed some numbers at 100,000, 250, 500. Cash value was awesome. Death benefit, awesome. Target was awesome, okay, which there's no free lunch. Okay, but here's the bottom line. So here, a few years later, after this client took out the policy, we were able to double his death benefit and get him a non-smoker class with Pru with this awesome IUL. And again, do you think this agent looked like a superhero to his client? Absolutely. Why? Once again, even a few years older, a few years later, okay, think about this. We were able to double the death benefit. The cash value was more than double. It was a win-win-win across the board. And when I say the big name IUL carrier that we were up against, you all know who that is, okay? And they do have a good product. I don't want to knock them in any way. But going back to the underwriting niche, right, that you need to know about, okay? And there's a list of them that we're going to go over. But this is where you win over clients, relationships, cases, okay? And next thing you know, right, you're changing your year. So you have to know enough to be dangerous. And I don't care if you're just focusing on term insurance, that's okay because Pru has a great product. If you're focusing more on final expense and burial, that's okay because you're going to start to shift into permanent product sales, especially with a product like this by Prudential. And you're going to hear, again, I don't want to steal Brett's thunder, but you're going to hear about it today. But this is definitely going to be well worth the hour spent with us today. We're going to do a question of the day at the end, so make sure you're paying attention. And again, jotting down notes for the fifth time. Okay, you got to pay attention, and hopefully you'll walk away with the new Apple iWatch, okay, which I have in the drawer behind me, just came out. Whoever answers first and correctly wins the iWatch. We're going to announce your name at the end, right before 3 p.m. Eastern, as a matter of fact. Okay, so let's jump right in. What you also need to be thinking about, It's Life Insurance Awareness Month in September, so make sure you are marketing these campaigns, videos. We have an entire turnkey library. We can even co-brand videos, flyers, whatever you want, basically. Okay, we have everything on the site. Check that out as soon as we wrap up today. Let's keep moving forward. What I want to do next is talk about what's most important to us here at Levinson. Okay, we do not sell on a retail level whatsoever. In fact, that should be illegal. It's a conflict of interest. You, the agent, you are our client, our prospect, the consumer. Okay, that's how we look at it. Our agent is our everything, period. So these reviews that come in on the right side, that's Google. On the left side, that's our Levinson Facebook page. This means the world to us, okay? I'm just going to go over this quickly. I'm not going to go over every single word. On the right-hand side, okay, now, obviously his first and last name is there. You know, we didn't make this up, okay, and I don't want to get into where he came from before, okay, because that's not fair. But let's just say one of those typical MLM groups that you probably know who they are and who I'm talking about, but we're not going to go there. Anyway, for him, this is literally like the Disney World of life insurance IMOs. He could not be happier. Him and his agents, phenomenal experience working with Levinson. Kerry and Bill are world-class and have built a cutting-edge platform and an impressive team. Andrew, Josh, RJ, Ashley, Saskia, Charisma, many more are the most knowledgeable I have met in the field, but always gets things done quickly and communicates so well. I've never seen anything like it. It's a blessing. Thank you for everything you do. That is everything to us. That's all we can ask for. That's what we strive for every day. Okay? We have our weekly trainings and meetings, and that's all we focus on is customer service, and the agent is our customer, period. End of story. Left-hand side. Great training yesterday. It gave me some ideas. Thanks for all you do. Great company, Charmin. Thank you. On the bottom left corner, hi, JC. This is amazing. Thank you in the Levinson group for all the hard work you guys do. I just got my YouTube account. I'm going to post my new videos on there. Okay, so I was just talking about the co-branded videos and campaigns and flyers. So we actually did this for Patricia, and she's starting her own YouTube account. Okay, we encourage this. You got to be relevant in 2024. Share your story. Okay, going back to when I started. Okay, think about this. Full circle. Let's keep going forward. By the way, leave a review. You get our IUL prospecting book on us, okay? Complimentary for our active agents. The newsletter, very important. In fact, this just went out yesterday. If you don't see this in your inbox, that means we have your wrong email address, or maybe it's sitting in your spam folder. Bottom line is, I just touched on this, we have thousands and thousands of products, over 90 carriers on the life side, the annuity side. How are you going to keep your finger on the pulse? It's impossible, okay, unless you check out our 411 newsletter, because we take the latest and greatest, what's hot, what's not, and put it under one image, okay, to make your world simple. So you know, oh, this product just was discontinued. Oh, Pru has a new IUL. Let me click on the consumer brochure. It's Life Insurance Awareness Month. Everything is here, like I said, at your fingertips. Left-hand side, that's Kerry's little editorial. He puts out every single month called Kerry's Corner, and he shares some great personal stories, all life insurance-related stories that will help you, again, move the needle in the space. Let's keep going forward. I have about 2 minutes left, and then Brett will take over. Real fast, incentives, cash, yacht charters, everybody wants to know about, right? We are in the yachting capital of the world, in smack middle in Fort Lauderdale, okay? Fort Lauderdale, Florida. So what are we doing? A yacht charter. We pay for everything. We even fly you in, okay? Round-trip airfare from anywhere in the country. We even have agents in Hawaii. This includes you, okay? Starting at $1 million of FIA premium, left-hand side, and then moving over to the middle and then the right side. You already know about our infamous Insure Me Now Direct platform. There's nothing else that exists like this, period. Multi-carrier, multi-product, direct-to-consumer like Amazon, your agent of record. You get full commissions plus renewals on most products, and every policy comes with a free 1-year scholarship, okay, except for dental vision. but everything is there, okay? And what we're saying, first banner app, $150 cash. Right-hand side, we're saying write 5 apps on the platform, $500 cash. Plus, like I said, first year, great comp, okay? You're not, just because you have the platform doesn't mean you're going to get a reduced compensation schedule or no renewals, okay? It's the same as if you were face-to-face, but everything is there. Check that out when you can, or reach out to JC, and he can help you with everything Insure Me Now direct related, including all the marketing that goes with it. Okay, these are some great ideas around annuities, especially we know rates are dropping. We know what's going on right now in the environment, and now is the time. In fact, there's never been a better time. Okay, and there's also never been a better time to go back to your annuity policy holders and speak about the new products, the new rates, and how you can do much better for them. So we have some great sales ideas with this flyer, and then we actually have a report. If you want a report of your annuity business to go revisit some of those clients, some of those annuitants, everything is at your fingertips in real time, and we'll get that out to you, okay? Let's keep moving. My last slide here is about the top IUL carriers that Levinson offers in direct IMO fashion. So it's very important you're not stuck between 22 layers, right, with a GA who's under an MGA, who's under an IMO 4, who's under an IMO 2, who's under, you need to work. If it's with us, hopefully it is, right? Great. But if it's not, just make sure whichever IMO it is, it's you, them, and the carrier. Very important stuff. All of these carriers are direct. You're going to see Prudential in the top left corner with their new product that Brett's going to jump into. And I think this is important. What you're also going to notice is every carrier that we have on here, okay, represents a good IUL, okay, a great story to tell. But we don't have a Burger King, a McDonald's, all on the same corner. Each one kind of has their niche, which is important, okay? It's going back to my first story. You have to know where to go for what, and that's what today's presentation is all about. So let's jump right into the featured presentation. We have our VP, Mr. Brett Gerber, is joining us, and his right-hand man, John Ponte. Brett, are you there, buddy?
Thank you, Bill. So I am traveling this week. Bill?
Yep, we can hear you.
Okay, great. Hey, I'm here this week. I'm traveling. I'm in Columbia, South Carolina. I'm not sure what I'm more excited about. Is ESPN trucks just pulled in front of my hotel. I might go say it after this call, or talking about the new IUL, obviously the new IUL. But I am excited to go see those ESPN people for a game week. I think South Carolina versus LSU is being played here in Columbia this weekend. But thanks again for the introduction. I'm going to go over 3 things. Why Prudential? Number 2, I have just a couple sales ideas, real quick ones. Then I'll hand it over to John Ponte to talk about the IUL. But Bill, you hit it right on the head. I mean, Prudential. When I've been in the business, the wholesaling for about 25 years, and I've been with Phoenix, Hartford, very, very liberal companies, and then we're bought by Hartford, and we've become very liberal in underwriting, impaired risks. Our underwriting is unbelievable. We have some of the best resources that work on your cases through Levinson. Our case managers, our underwriters, they've been with us for years, our advanced planners. And I'll get right into it, but Bill touched on a lot about Prudential, but it's, it is one of the most valued companies, I think, in the industry, just working for some other companies that just really aren't around right now. But he hit it right on the head. Tobacco users, we love tobacco users. Bring them to us all day, non-smoker rates. We love people that smoke marijuana. We love the gummy people. Bring them to us. Think of us. Tobacco users, marijuana users, gummy users. One part, if you're in competition, we do age last. So if you're up in competition, everybody else has got one more year on them. So you're going to come with a cheaper premium. Underwriting, impaired risks. Bill hit it right on the head. When we get cases, we take a look at them. If you don't like the offer, or if there's something different in there, I feel like since, I've always been wholesaling, I feel like I do for a living, of course, besides sales, I feel like I negotiate underwriting like every single day, moving a case from a table C to a table A. Do we really need those financials? can we use some other type of reports so we can get this person from a standard to a non-smoker plus? We are in that niche. We deal with underwriting every single day here in sales, my internals, our case managers, because we know bottom line, we want to make sure you get the best offer out to your client. Talk about, we do have a fast track program. He put it up on the board there, but if you have a case between the ages of 18 and 60, below 3 million, we could probably get you a policy within 7 days if they're a healthy person. Well-balanced product portfolio. Take a look at our term. You can convert our term into any life insurance product, Prudential. And then we have a slew of other products. But let me just step on, because I know I want to get John on the call here in a second. But 3 things I just want you to, I want to talk to you about is the sales ideas. Every other Monday, Bill has this link, Carrie has this link. Every other Monday, we have 10-minute Mondays. We have our advanced planners get on there and they talk about if it's estate planning, alert design, whatever it might be. But we have 10-minute Mondays. If you're looking for a great idea every other week, please get that information from Levinson Associates. What's working? Everybody says, Brett, what's working? You cover the Southeast. You're dealing with cases all the time. So 2 quick things. Obviously, estate taxes is coming up, right? We're not sure if it's going to go stay or come down or whatever it's going to be, but we've been running into a lot of designs, individual and with survivorship cases. The clients are dumping in money in the first year, and then they're going to wait 4 years for another premium and start paying in the 5th year, so they know exactly what's going to go on with the death tax. So that's just our skip pay designs. Feel free to reach out to Levy and Associates. They can run those for you. Again, they're called skip pay designs for estate taxes. One last thing. So when you're doing policy reviews with clients, we are the king of loan rescues. There's over 500 billion of loans out with carriers in the United States on policies, over 500 billion. So there's a potential there. We've been doing these cases since 2015, and we do a lot of these every single week. So if you're ever looking at policy reviews with your clients, you see that they're overloaned on a policy, just ask them a couple simple questions. What's your CAT surrender value, your cost basis? Is the policy, make sure the policy is not loaned out over 90% loan to value, make sure they're healthy. In a nutshell, with our loan rescue program, we can take this policy from the other carrier, 1035 it over. They have to go through underwriting and put them in a new policy, and no more premiums, typically lower premiums or same death benefit. So just think about that. If you have any questions about loan rescues, definitely reach out to Levinson Associates. And then let me just move on to momentum. I'm going to touch on it real quick, then I'm going to introduce John Ponte. I've been with Prudential now 14 years, and we've never been in the IUL accumulation space, so you call it. I know there's so many carriers in this business that do $400 million of premium a year down to $100 million of premium a year. And we came out with one of the best products, I believe, and I've been asking for this forever. And John Ponte and his team put this together at Prudential. We finally came out with a competitive product, just like Bill said. We're either 1, 2, or 3, ages 30 to 55 with distribution. It's an amazing product. It's simple. It's straight to the point. You have fixed loans, participating loans. You have the S&P 500 and NASDAQ 100 as choices. It's a great product. Please take a look at us. And I'll just, no further ado, I'll introduce John Ponte. He's our Director of Product Development at Prudential. He's going to walk through the Momentum IUL. Thank you, Bill.
Appreciate you.
Great. Thanks, Brett, and thanks, Bill, and thanks everyone for joining us. And thanks, Bill, for reminding everyone of Life Insurance Awareness Month. It's a really important time in the industry to always remember, what our purpose is and what we're doing, and thank all of you for helping getting more people insured. It's a really important part of everyone's financial plan. At Prudential, we've been a leader in life insurance. I'm responsible for our permanent product portfolio and the strategy and our product development efforts. you can see we've been number one in VUL for a long time. That's been where we're really strong. We pivoted a number of years ago now, almost a decade ago now, away from being the leader in guaranteed universal life into various types of VUL sales, and we've been really aiming to grow our accumulation portfolio in a real way for a while. And we've had a lot of success with our VUL Custom Premier 2. And then 2 years ago almost now, we launched an IVUL, a registered index product called FlexGuard that's done really well. And now finally we have a fixed IUL that's geared towards accumulation. And we really recognize, as we were talking about a lot of accumulation sales, that there's a psychological difference for some consumers that are interested in IUL than those that might be interested in our VUL leadership products. And that's basically what's shown on this chart. To simplify it, it's, hey, are losses impacting them more than they like seeing gains? And if the answer is yes, then they might be willing to look at a product like Momentum IUL, or any IUL for that matter, that cuts off the losses with the floor of 0, but still gives them the opportunity to earn more than what fixed income type interest is being offered out in the industry. And that's really the fundamental value prop of indexed UL. An accumulation IUL, which is where most of the industry is really just a product that's optimized to accumulate cash value when a client funds it at a higher level than a minimum death benefit type sale. So that's what we've introduced here. We've stuck to the fundamentals of what an accumulation IUL should be. I'll walk through a few different things from a product structure standpoint that I think makes us unique, and then we'll wrap up with a few views on how we fit into the marketplace, and then we can open up for any questions that there will be. So real high level, it is death benefit protection first. Obviously, it's a life insurance product. We do like to see the product geared towards accumulation, whether that's planning for supplemental retirement income or college funding or other types of needs where accumulation can work. And we do that in a couple ways. One is, how does the cash value grow? We have a choice of index accounts. We'll walk through how that works. There is a persistency credit that further boosts the performance. And then we have a choice of how to access that cash value if they get to retirement, and the choice of fixed or participating loans. We also have access to living benefits. Our most popular rider that's optional, comes with an additional charge, is our benefit access rider. In case in retirement a client becomes chronically ill, which is could be a major derailer, if they have the benefit access rider on their policy, the death benefit at time of claim is something that they can accelerate on a monthly basis to supplement their derailed financial picture, to help pay for different things that can help them if they're dealing with a chronic illness. So let's get into the index accounts and the different choices and why, Brett has said it's a straightforward product, and why I echoed that in terms of the fundamentals of what IUL is. We have 5 different choices to grow cash value. One is a traditional fixed account that is in the product. It's got a current crediting rate of 5%, so it does pretty well there. We have 3 different capped index accounts that are going to offer upside potential with a floor of 0, and the upside is limited by the cap. We have a 1-year S&P 500 cap index account. That's pretty traditional. It's what you see in all different IULs. We also have a 1-year NASDAQ 100 capped index account. And then we have something that's new to Prudential anyway, and new to the industry, is the one in the middle there, the 6-month S&P 500 capped index account. And I'll talk about how to think through that in a second. We also have one uncapped index account based on the S&P 500. It's got a floor of 0, so still full downside protection, but its upside is going to translate to our participation rate. So you'll have a 60% participation rate, which means as long as the S&P 500 is positive, you'll get 60% of that. So in a really strong growth year, think 17, 18% or more, the uncapped account will earn more index interest than a capped account would. All right, that's the high level, 5 different options. We're going to go through how to think through the different options, a little bit more detail coming up. First and foremost, S&P 500 and the NASDAQ, well-known indices that we're tracking against with the different index account choices. We don't have any custom indices built in. We don't have any volatility control indices that we've added. We've found in the past that sometimes those don't live up to client expectations for upside potential. Other times they're just confusing, right? Who's to say how the underlying index is constructed, what the algorithm is? You have to explain it. It's hard to find in terms of tracking performance. You don't have to worry about any of that with the S&P 500 and the NASDAQ 100. Clients will recognize those brands, and they're easy to track. You can pull it right up on your iPhone screen. The NASDAQ 100 is a little bit more unique. It's a little bit more heavily weighted towards technology and innovation. Over, since 2007, it's got a little bit of a higher annualized return, and it's just something to think about. While they're pretty correlated, they do have different underlying performance. And I think a lot of times in IUL we get caught up in looking backwards, but really having a choice when you look forwards and trying to understand where a client might think the highest growth might be in the future is important as well. And that's one of the reasons that we're offering choice of underlying indices. This is just another view of the year-to-year returns, kind of spiked out in a bar graph form. You can see the NASDAQ in the teal and the S&P 500 total return in the darker charcoal color. You can see they move in similar directions, but the amounts are quite different. And even though they're both capped results, you can see results where one might be negative and the other one might be slightly positive, or one's flat and one has a higher growth year. Offering 2 different indexes within the product just gives consumers more diversification and ability, again, if they're looking forward, to align their premium allocations to where they think the best opportunities are in the future. All with a floor of 0, so in case the markets are down, they're protected on the downside. All right, the second choice really is segment duration, and this is where we're offering something that's different in the industry and you won't see somewhere else. So as we were looking at developing this product, one of the things that we keep in mind is the consumer expectation and consumer feedback that we've got from selling death benefit focused IUL in the past. As Brett mentioned, we haven't really been in the accumulation phase, but in the death benefit portion of the market, one of the things that we've gotten from an objective standpoint is the client experience when they get that first annual statement. When you have 1-year point-to-point structures, they always start after the contract date. The 1-year anniversary, which the annual policy statements are driven off of, are going to happen before the first segment matures. And so the first question everyone asks is, how come I don't see any index interest earned yet when they get their first annual statement? And the answer is, you got to go back and kind of educate them and say, well, you have money in different segments. They haven't matured yet. In a couple months or a month, we'll tell you, how much index interest you earned. That's never a satisfying conversation, at least the ones I've been in. So to avoid that or solve that challenge from an in-force perspective is you can allocate some of the client's money into a 6-month point-to-point structure, and that ensures that you're going to have a matured segment, and you're either going to get the floor of 0, or more frequently, at least looking in the past, would have had an index interest credit in those first 6 months. And therefore, you'll see that on the first annual statement because the 6-month segment will have matured before then, alleviating some of those conversations. And again, you don't have to put all of the premium allocation into this to see index credits. You just have to have some in here. But moving on from the left-hand box to the middle and to the right, we recognize that there's also additional consumer value that's out there with these structures. One is that by having your segments mature more frequently, you're resetting the clock. You're either capturing games or resetting at a lower price point for the second half of the year more frequently with the 6-month segment versus the 1 year. And then on the far right, you can take advantage of compound interest. If you have a constantly increasing equity environment, then you're going to earn index interest in the first 6 months, and then that index interest becomes part of your segment value that can earn index interest in the second 6 months. So you get some benefits of compound interest as well. So let's look through a couple of examples to try to make this come to life. Real hypothetical one where we're going to ignore charges and just kind of walk through what happens to $100,000 in terms of the engineering of the product in the 6 month segment. So let's say day one they put $100,000 of net premium in, and 6 months later the segment matures and the S&P 500 grew by more than 4.75%, and they get capped out at the cap for the 6 month segment of 4.75. That's an index interest credit of $4,750. You get to that middle navy box, you see $104,750 becomes the next amount for the new segment that starts 6 months later. So you're now starting with a higher balance. Let's say you again get a positive S&P 500 growth rate of 4.75 or more, and the cap hadn't changed. Now you're getting 4.75 on $104,750, and that index credit is $4,975. So now your total balance at the end of the 1 year is $109,725. Again, this ignored policy charges, but that just highlights the sequence of the returns. You're going to get 2 credits in a 1 year period instead of 1, albeit at a lower cap, but you'll have the ability to earn compound interest on top of that. The next slide kind of talks through some real life examples in the not so distant past. So the first one I'll show on the screen here is December 15th, 2017, ending, I guess it would be July 15th, 2017 to 2018. And what you see here over a 1 year period with the segment ending in December 15th, 2018, the 1 year change in the S&P 500 price was actually negative, right? And so the floor of 0 comes into play in that third column, and the index interest would be 0 on that. But when we look back over the course of the year, we realize that the first 6 months of that 1 year period from December 2017 to December 2018, the first 6 months actually grew. The S&P was up 3.88%. And so in a 6 month account, client would have earned 3.88% because that's less than the cap of 475. And then the rebound, or I guess in this case, the decline of the market happened after that first 6 month period, and it actually declined 6.47% over the second half of the year. And so the second segment in the 6 month account over the 1 year period would have earned 0 and would have been protected. And so you would have earned 3.88 combined in the 6 month account versus 0 in the 1 year account. Now that's not always going to play out that way, and sometimes you're going to earn less as a result. And 2018 to 2019, the next row below it, is a good example of that. You had a strong rebound in the S&P 500 over that year. The 12-month change from December 15th, 2018 to December 15th, 2019 was almost 22%. So you get capped out at 10.25, which is our current 1 year S&P 500 capped account. When you break it down in that third column there, the 6 month changes is interesting as well. The first 6 months grew by 11%, and so they would have been capped out at 475. The second 6 month grew another 9.76 from that higher starting point, and so you get capped out again and earn another 4.75 on top of that money for a compound return of 9.73. So you're giving up just over 50 basis points and upside in a constantly growing market, but you're getting the benefit when the market's more choppy. And so we don't know what the outcomes are going to be. And as advisors, even stock pickers, no one knows what the markets are going to do in the future. And so having some money allocated to both could be a good strategy. It allows clients to see that first segment mature on their first annual statement, which makes that conversation at the 1 year point much easier. And you have some real benefits in choppy markets of being able to earn interest where maybe the 1 year will be stuck at the floor. So just some things to think about. It's unique in the marketplace. We think there is consumer value as well as an in-force experience benefit for consumers. All right, just to review our index accounts real quick. We have 4 different index accounts, plus the 5th option is the fixed rate. The fixed rate's earning 5%. The 1-year S&P 500 cap is 10.25 on a current basis. The 1-year S&P 500 uncapped has a 60% participation rate and no cap. The 6-month S&P 500 capped account's got a cap of 475, but you're going to earn interest twice over a 1-year period. And then the 1-year NASDAQ 100 capped account has a cap of 10.5. So it actually has a higher cap at this point, 10.5 versus the S&P 500 cap of 10.25. That relationship may not always be in that direction. There may be times where the NASDAQ cap is lower than the S&P 500 cap in the future. It's all going to depend on the option pricing between the 2 different indices and the hedge strategy behind them. So at different times, they're going to change. And real quick here, speaking of caps, the expectation on IUL, if you sold IUL, you know this is true across all carriers or all products, but it's always a reminder, caps are going to change. They're going to be impacted by interest rates as well as the hedging costs underlying these indices. Carriers adjust caps to just try to balance those. It's not a profit lever. What we have here is actually work that our investment teams at PGIM put together. They actually took a hypothetical portfolio of interest rates looking at the Moody's BAA index. It's not exactly what we're investing in, but it's a proxy, less a pricing spread of 50 basis points. And then they looked at actual option pricing on the S&P 500 from a third party. And what you see here on the graph is that, yeah, caps are going to change. Historically, they could have been higher. More recently, they were much lower. They're rebounding back higher. The point here is caps are going to change. No one knows in what direction, but over the long term, which life insurance is, right? Life insurance is a long-term play. You can certainly earn the type of upside that's valuable to clients who don't want any downside risk. All right, let's get into some of the client opportunities and sales ideas. I'll skip ahead a couple slides because Brett covered them so well, but I did want to show where we're fitting in the industry. First and foremost, IUL income solves. All of our illustrated rates are going to be dictated by the S&P 500 1-year account with the 10.25 cap currently. That's the maximum illustrated rate here of 6.42 on a max distribution in par loans on a male 45 best class, overfunding the policy with $25,000 of premium for 20 years, death benefit option B switching to A, and then taking income for 20 years in retirement. Looking at just the S&P 500 1-year account here, what you see is you're going to have a max distribution with a par loan of about $90,120. If you were to use fixed loans, you're going to look at about $82,308. Obviously, we should be setting expectations for clients that it's going to be a range of outcomes. You're not going to get a constant 6.42% as we show on an illustration. Your income is going to be in some range depending on their performance. Maybe they do better than 6.42, or maybe they do slightly different, or maybe they get that on average, but the sequence of return is different. You're going to be somewhere in that type of range is how I like to position it. And then what we show lower on is, hey, if you have different cap levels, or if you just want to be more conservative and build in a little bit of a lower expectation, you can back down the illustrated rate. Let's say you illustrate it at 605 instead of 642. The max par loans would be at 9102 at 642. At 605, it'd be at 81,000. Again, just the concept of, hey, you're trying to accumulate as much cash as possible. It's a pretty efficient product to do that, but how much income you get out of it will really depend on how well the cash value grows. And then I'll cover 2 more slides here. This is the second to last one, but I just want to talk about how the 6-month a capped account illustrates. Its index interest rate's 3.03, but you're going to earn it twice on an illustration within 1 year. So it's really more like closer to 606 or 610 when you factor in the compounding benefit of it. But if you were to put all of your money in the 6-month cap design, you're going to have a lower illustrated result of 86,220 on a par loan versus the 90,120 on a 1-year point to point. but clients might want to initially allocate to the 6-month segment and then have it automatically renew into a 1-year design to get the higher cap. And so what I have illustrated here is a capability we have in our illustration system to set that up ahead of time, where you can initially allocate to the 6-month and have at that first 6-month period, have it renew into the 1-year design. And when you do that, the max distribution using par loans only drops from 90,120 to 89,856. So barely any impact at all, but just something to think about, as there's a variety of ways to illustrate the 6-month design. You could split your allocation between them. You don't have to go all or nothing. But this is just one way to demonstrate that it's not a big drag on the policy. And depending on the expectation of the future or what they want their experience to be like, having some money in the 6-month account certainly can make some sense. Finally, competitively, a bunch of the companies on here that we got from our competition unit were on the slide earlier. All these products are good products. These are the top products. This is one cell, the same 45, so you're familiar with that 90,120, same case design, happens to be number one here using par loans. If we switch to fixed loans, we kept the same order of companies. Now Allianz is number one, but the top four are all, other than Allianz, are all in that 82,000 mark where Momentum IUL is. Key point here is just that the product is priced well. It's a straightforward product. We're not, playing any games with illustrations, simple index account choices to pick from. And when you broaden it to, the top 16 companies, again, looking at income rankings here, the product is a top 4 product, looking at it in a variety of ways. Obviously, every single cell we can't show, and we can't run every single possible design, but it's just to give you a flavor that this is a competitive product. It should be something that you look at when you're running across cases for clients who need accumulation purposed IUL or life insurance in general. So with that, I'll hand it back over to Bill or Brett, or we can handle some questions.
Yeah, that was excellent, John. Thank you for that. We have about 8 minutes left here. Andrew, did you get to all the questions, or is there anything that came up that we need Brett or John for?
Yep, pretty much all questions. We just had one about policy charges. I know when we ran that illustration for the agent, you mentioned the case study earlier, the early cash values were really good. So what just in 30 seconds, do you have an idea of what those are, the charges lower in the first 5 to 10 years?
The charges aren't necessarily lower early. I think they're actually probably higher early, like most life insurance products, but I'd say it's a competitive level of charges relative to other products. So I don't think we're out of the market there, but the way most life insurance products, they tend to be a little bit front loaded because of the acquisition expenses that come with all life insurance sales. But I think it's relative to other life insurance products, I think it holds up well.
Yeah, and what we can do, we'll run some side-to-side illustrations and show you the difference. But like I explained early on, I mean, we did a comparison yesterday against the leader in the IUL space, and this did a great job at neck and neck. So I thought it was very impressive. And then you throw in the underwriting niche, and we destroyed it. So you just got to kind of use that in your back pocket. Okay, John, great job once again, and Brett, great job. Let's dive in because I want to make sure we get everyone out before 3 p.m. Eastern, and we have our giveaway. So how do you get started? Everything is on our website, and this is the screenshot in front of you. If you want to just follow those yellow arrows, we're going to send a thank you email to every one of you that you'll have in your inbox tonight with all the brochures and everything we discussed. In fact, you know what we can do, back to that question, we'll include a sample illustration just so everyone can see the value here. I think that'll be a big plus. And then keep in mind, too, in going back again to that case study, that example from yesterday, you have to remember, thinking about, there's a lot of consumers that have these prescription cards now for marijuana. right? Now it's in pretty much all states. So let's say you have a cigar smoker, one a day, right? Or maybe someone that has a marijuana prescription card and they use these dispensaries, whatever it is. You're coming in at a select non-tobacco health class, okay, versus a tobacco class. So putting everything else to the side, just that fact within itself, you're coming in at 30 to 60% lower premium on term as well. So just, I would write that. That's a big deal. So just keep that. In fact, write it down. We'll include, we have a list of all of Pru's underwriting highlights. So we'll have that in the thank you email as well. But those are things that need to be in front of you, especially if you're calling on leads and you're selling virtual over the phone. These are things you need to have literally on the left-hand corner. I don't care if it's on your screen, scotch taped, whatever. Just make sure it's in front of you. All right, let's keep moving forward. I want to talk about different strategies and ways that you can move the needle when it comes to IUL prospecting, sales in general, right? You have to make sure that you know enough to be dangerous, as I always say. So we have an IUL Learning Center dedicated to our agents and IUL sales. It's all complimentary, but I encourage you to check this out. These are webinars, podcast episodes. We brought in Joe Ross. He did some great trainings for our agents, but these are things that you can take advantage of, even working with young professionals, business owners, okay, and then bringing up the IUL sale. We even have a Stonewood software sales platform, okay? We can run these illustrations that are complimentary for you, okay? Or if you want to join the membership program, there's a discounted rate for the Stonewood platform. So we have a bunch of tool sales strategies and marketing pieces that you should be leveraging and getting the word out. Right? When people think of IUL sales, which I'm telling you now, a lot of the younger generation, right, they're more educated because of the internet, right, and great YouTube videos, but they have to remember you as the guru. So it's so important for you to be out there on all social media platforms spreading this message. And we have all the resources, again, for you to do that. Let's keep moving forward. So Joe has this butterfly chart, right? And he shows the value of IUL, right? And retirement planning and tax saving strategies. And these are great ideas, and they're simple ideas. He has a napkin sales presentation. I mean, it's a few bullets done within a minute. And by the time you're done, the client says, oh my gosh, run me a quote. Okay, we even have books. We have IUL prospecting books that tee up the sale for you. Okay, I'm telling you, this stuff works. But you got to try it, okay? It's very, very important. And keep in mind, the average target premium and then commissions are much higher than what you're used to if you're focused more on term and final expense sales, okay? And then I was just thinking about this in orphans. We have the orphan lead program, okay? And you can convert a lot of these term policies. Or you can, let's just say, if the person's still healthy and you're working the orphans and they have a term policy and they're thinking about IUL, bring up the Prudential product, run an illustration, slam dunk, you're in, especially non-med up to $3 million, as long as there's no red flags. So anyway, these are things you need to have in your pocket. Let's keep moving forward. This makes it very, very simple for you to sell, especially on the phone or virtual. It doesn't matter, on a go-to webinar like this, a Zoom call. So you go into our website. This is all complimentary, okay, and you're just putting in some basic info about the consumer, okay? You're going to run the quote. And what's so neat is as soon as the consumer says, wow, Bill, you know what, this looks great, our system is going to take all that client info, populate it right into a drop ticket or e-app, right through iPipeline, which also feeds into our system and then Prudential's home office instantly. Okay, so very simple. This happens in less than 15 minutes, okay, from A to Z. You got to utilize the latest technology. This is called iSolve, and again, it's 100% complimentary with Levinson. In fact, we were the pilot for this program. Let's keep moving forward. These are some of the great highlights I was talking about earlier, things you need to have in your pocket. Left-hand side, right? Check this out. Cigar users, chew, dip, pipe, nicotine patch. They love them. They love them. Height and weight issues. Bring them to Pru. okay, HIV positive, okay, they'll consider diabetics, even insulin, okay, they will give you excellent, in fact, on the average, 1 to 2 classes better than the traditional brokerage carriers. Recreational marijuana, we went over that, cardiac history. They also have a great SUL product where one person could be totally uninsurable. We have a great case study on the right side. We'll include this in our thank you email you'll have in your inbox tonight by the time we wrap up. Let's keep moving forward. Lead programs, everybody wants to know more, as we know. Wonderful. We have a great program done through Facebook or through an exclusive mailer. Totally up to you. Our agents save around 10 to 20%, depending on the batch that they purchase. Everything's in front of you, and this will be in your inbox as well. Okay, this is a great training. Okay, the next slide here, especially post-COVID, right? We know consumers now are more comfortable, right, working with you online. And the carriers now, right, the underwriting departments have changed because of technology. They didn't have a choice with COVID, okay? We all know how that goes. But Charles literally came on our webinar last week for an hour, and he teaches our agents how to be more comfortable, how to sell online or through a phone call, and how to set up your website and reviews page, right? So your prospects are more comfortable trusting you as the IUL guru, okay? Or it could be any type of life insurance policy or annuity, okay, for that matter. So this is a great webinar. We'll also include this in the thank you email. Let's keep moving forward. These are some great Life Insurance Awareness Month posts that we found on Facebook and Instagram. By the way, you should be doing the same thing. All we do is before every webinar, and this is my promise to our agents, just go on Instagram or Facebook and type in IUL or Indexed Universal Life, and the top posts are going to come up. It'll say recent or top performing. Always click top performing, and you're going to see what other agents are doing, right? And what's working great with the average consumer out there. Well, just look at the likes and the comments. You can see on the bottom. The one on the right side, 245 comments. Is this rocket science? Okay? You don't have to reinvent the wheel, change a few spokes, boom, add your name, you're done, you're off to the races. Even if you have 5 comments, that could be 5 new leads, 5 new sales. Okay? You got to go back to basics sometimes, but you got to get the word out and be proactive. That's the key. Okay, let's keep moving. By the way, the Bill Levinson Experience podcast, another great training tool, okay? And it doesn't matter if you're doing this for 42 and a half years from Naples, Florida, or you're brand new 6 months in from the city. It doesn't make a difference, right? This industry is changing so fast, we never stop learning. And this is a free tool, right, where you can literally dive in, and I put my agent hat on, and I interview these gurus, right, for an hour, and I pretend I'm you, and I say, talk to me, what's working, what's not, any sales strategies that I can use in my practice, right? That this is how I look at it, and the purpose is to teach our agents to sell more product, help more families. Left-hand side, this talks all about life settlements in 2024. The right-hand side is where I handpick some of our top MDRT agents, right? And I pick their brain on what's working and what's not. Let's keep moving forward. I got one slide left, and then we'll put a bow on this. I know we're 2 minutes over. This is our training events, which is what you're on right now. Every single week we do these live, as you know. Next week, real fast, we're going over our social media guru and website guru, his platform, where you get a discounted rate if you want to use his services. And we talk about utilizing AI in today's new insurance marketing world. Just under that is Insure Me Now Direct Enhancements. We're coming out with a pro version. Wait until you see what we're adding to the platform. You're going to love that. One America on the bottom, one of the top hybrid carriers, has a new product launch. We're going over that on the 3rd. And then let's move forward to our final slide here, and we'll wrap up. Before we do that, I want to talk about my Positive Tuesday quote. And by the way, okay, this is go with the flow. This is our way of just getting the word out, marketing, branding to our agents. You should be doing the same thing for your consumers, your family, your network, your friends. They all need to remember you're the go-to when it comes to life insurance and annuities. and even health insurance if you're selling health, okay? This is our quote of the week. If you can make it through the setbacks, they typically lead to the greatest of comebacks, okay? You got to keep your pedal to the metal. Be proactive, okay? Start some of these new strategies, these ideas to get the word out to the masses, okay? And little by little, you're going to round the corner, and next thing you know, you're going to be like that Bill Levinson crazy guy. He was right. He was right. I'm so glad I listened, okay? Just like Patricia with her YouTube channel, okay? She just got started. Anyway, question of the day. Make sure your little fingers are on the keyboard and you're ready to be first and you're ready to be correct with your answer. My question of the day, I spoke about cigar users and recreational marijuana users. What would be their health class with Prudential? Tell me the health class they would receive with Prudential, okay? For your consumers, prospects that smoke cigars or use marijuana on a recreational basis. Tell me the health class and you win Apple iWatch and our IUL prospecting book. Andrew's going to tell us who was first and who was correct. Andrew, do we have a winner?
We have John C. John C.
John C., congratulations. The answer was select non-tobacco or standard plus non-tobacco, same thing with Prudential. That niche alone is worth this last hour sitting here with us on this webinar. With that said, let's have a great day, great rest of the week, great selling, and thank you again, everyone.